Actually, from the title of this video, can I be more annoying with the damn lighter? No. Every time I talk, it's just got to be like Lil Wayne lighter flick style, right? Like, come on now, bro. And you know, you guys are used to my routine at this point, but I think the funny part is when we talk about some of these concepts, people expect me to be so serious, and I'm just like not. I just find it funny. Um, but we do some serious work. I think that's very cool. But I will forever be smoking this backwood and playing Pokemon on my phone. Always doing. And like the reason why I play so many video games, um, is like again, the more you guys get to know me, the more I talk to you guys about what I do here. You get to learn more about me, right? Again, being a skateboarder, I love video games. Like these things are like not just what I grew up doing, but it's super helpful while you're waiting for your trades to play out, you know? But wow, I rolled that. That's a good feeling, isn't it? And so you can probably tell by the title of this video, we are talking about algos and not just any algo, but trending algo. All right. And I'll be honest, like reading about this, learning about this, trading it, um, at first, like getting down the concept that there's more than one algorithm does kind of strike you like kind of like odd for a second, but also to be clear about whatever algo that we're talking about, whether it's one or two, I even at one point made like my own little like criteria for like what I called algo three, and uh, you would have to come into the Discord for that one too. It's not anything I need to discuss here. But long story short, when you're looking at the trending algo, and the reason why we're focused on this right now trace before the retracement algo, is because I want you guys to get understanding of like what you can do with it. Like understanding again, like not just on a basic level how to hold your trades better, but when you're like interacting with price a certain way, I mean, whether it's over the course of 5 days or whether it's, a singular day with a smaller dealing range, you can come on and do really incredible things just understanding. And again, our basic idea to all of this, right, is what is algo one or two? It is the as we take it to complete dealing range. Yes, it's not like one of them is a certain direction. No, they both have a bullish or bearish profile. All right. And so the reason why, again, wow, I rolled that. The reason why we're talking about like the trending algo first is it helps you to hold your trades longer. It helps you to stay on track with where in the dealing range you're expecting all the price action to kind of um, clump itself together a certain way. So, for example, now I have so many different um, market templates on TradingView. So when I'm looking at something, right, and you've noticed this, that a lot of times when I start the same way. So I'm on the hour chart. I can see, again, for those who are new, you can see like the weekend for me is always yellow. And my sessions are labeled visually, right? So London, New York, and New York PM. Now, when you're looking at price, and I've referenced so many times already, how coming to a certain asset, you need to understand your optimal dealing range or how quickly price is moving through one of these dealing ranges in general. And now in the book, it'll reference like, hey, go to like a 4 hour chart, start looking at like how some of the major price swings, how far they are in size. So if you're seeing how you see mostly like 27 pip swings or 81 pip swings or whatever, from your 4 hour chart, you're gonna, look to run majority of that PO3 number on that asset. And in my opinion, what I like to do also, again, like you see, I'm looking over the course of 5 days here. You can see that like it doesn't take very long, obviously, for price to run through this 27. It's not very long, but it's long for like, you know, this would be long for any other smaller asset. Like, um, obviously, like I said, stocks are not going to run through a 27 this quickly. And Q's going to rip 10 of these motherfuckers in a day. Gold might just interact with one or two of these in a week. And so how you can probably tell that I'm downshifted, right? So went through 2 or 3 of these. And so obviously looking like all the way down, starting in this one, right? And this is the thing, when I do these market reviews, I want you guys to like really feel what I'm saying. You have to get used to narrating. Become a reliable narrator. I've said that multiple times. And when you're looking at the pathway of these dealing ranges, right? Again, we talked about how to know what algo is what, where they start, what they look like, and things like that of that nature. Now, really quick, just so you can understand what the difference is, let's do it again. All right. And again, to be annoying, all right? If you would like to see some members only videos that are not on this channel that perfectly describe in detail all of the things that we talk about here, even further, come and join the Discord. There's so many thousands and thousands and thousands, literally, of examples of everything that we do here. Thousands. And the videos are advanced level ones, have beginner level ones, intermediate level ones, cover the same stuff that we do here. Um, and you get to see it from a totally different perspective as well. And so my thing is when we're operating 5 days in a row, right? Regardless of the algos, a lot of times you'll see, let's say price opens up on a Sunday, whatever, price will be moving. When you spool down into like a Monday optimal trade entry 8 to 11, you'll be met with like, this interesting little price action at first, and you'll kind of see where you need to start looking. Now, when we talk about the trending algo, we talked about how it goes from A to B in a dealing range if bullish, or from A to B when bearish. Now, when you're looking at price, obviously spool down first, whatever, and I'll zoom in after I do the drawing. But let's say price is consolidating, whatever. I don't even trade normally till Tuesdays. So I don't give a fuck about pretty much any of this. All right. Say it does this here. A little London high, come down. We'll say it makes a little optimal trade entry, and then back down. Now, when you reach this low again on this Tuesday, and again, you're watching all the price action here, just open and then go lower. Okay? Now, mind you, you might see it aggregate up and down clearly. It's going to zigzag, is basically what my point is, right? But you're going to break this down all the way. You're not done with this thing. So when you come down and you see how price, again, might hit this rejection block, it's going to go to this breaker level. I have a few words with the breaker. It might pop down, give you a little breaker situation here. Pop back to fair value. So it might do some wild stuff in here, right? Breaker level. And then right inside of a kill zone, it's going to pop right into this fair value gap on the third day. So Tuesday is now low of the day, right? But it's going to hit you when you're starting to see all this set up a certain way. So it goes from the rejection block up to the breaker, does a bearish breaker down to the fair value gap. And you start running. There's a liquidity void here, so it goes through that. It goes a little to your EQ. It's going to make a little breaker mitigation situation. It's going to touch the top of that first high that we talk about all the time. And then PM session could easily run you right to your order block level, and it's going to consolidate a little bit. It's not going to hit the high automatically. And so what's interesting about that is, not saying it has to go like super far, but it can hit like a fractal mitigation block in this area too, like after the order block is referenced. And again, it's the same thing. You're not focused on anything different. The pathway is no different. I mentioned before that if you take the algo 2, you have to understand what the objective is. And again, right, it's going to, pop in. It's going to probably run that high actually at some point in probably London, right? Because it does that during manipulation. And this is my point, man. Algo 2 is nothing like Algo 1, literally. So when you see how all this consolidation will start at a low and a discount, so you're already prone towards buying anyway. You're going to eliminate sells in a discount. You're not doing that. And if the week started a certain way, right, it's going to open like this. And all the price action that you're normally given is clean. So like, yeah, Monday might give you a little high, low, whatever what it wants to do. But you're paying attention to how price action is reacting. So when you look back at it and you study it, you might be like, yo, whoa. I can see how we made a rejection block, and there's normally like a little wick down here, right? Or candle, set of candles. And me, I've said this before, the way I set rejection blocks up, it's like a flagpole in my mind. It's like a little flagpole. And you're not looking for the liquidity to be taken down there. You're looking for the rejection block to straight stop that and reverse price. And again, it's all about the pathway. So when you see it go from your rejection block, it's going to fly up to that breaker level. Yes, it leaves imbalance on the way there. You want that. Don't start aggressively buying that because you feel anxious and FOMO that you're going to miss the move. You're not. I'm telling you, you're not. These things have a specific pathway to go through this dealing range. And so let's make it less annoying, right? Because we're playing with time. But the levels is what I want you to really focus on, all right? Jay always says the weirdest thing. And it's funny when people say that, right? Because I lecture a certain way. And like, I mean, you've seen plenty of my videos. I'm not scared to be myself, number one. Number two, however I like the concept to be optimal, that's how I'll explain it to you. So, like, for example, when we talk about how do you verify which algo is which? That's a great question that I get all the time. And in my opinion, you can do it in a number of ways. Doesn't make it right or wrong. But what you do need to get comfortable with is like watching this play out fully a bunch of times before you try to interact with it, right? You can get a slight variable. You can get like a bearish breaker down, or you might get like a bullish breaker on top of this, right? Right, your breaker area, and then it goes up or whatever. But my thing is, it's really in order. So rejection block to the breaker, it's going to lead you into your fair value gap. And even with this, how this is drawn, in your mind, you're like, yo, like, oh shit, bro, price be really looking like that. Like, oh shit, like, you know what I mean? Like that should really be going off in your mind right now. You see the scenario in the marketplace so many times and have no idea that you see it. That's what makes it ridiculous. And it's really just smart money. They're smart people, literally. Okay. The way central bank likes to move price is funny. Again, I give you other things that I like to read about. And again, when we get to order block week, right? That's coming up in I think 2 weeks from now, 2 weeks to a month from now. There's a lot of content we have to get through, but um, especially on this free YouTube mentorship, there's a lot that we could talk about still in a basic way. That's why I have so much content here for you guys, and still have so much left for the Discord that it's crazy. But these are in order, and this is my point. You're going to get comfortable with this. So you can develop a trade plan based on Algo 2 and how it works, whether you like breakers, whether you like fair value. But the point is, you're understanding where price is going to land. And again, how you know that price is working itself through this little pathway, you'll get that consolidation or points where it starts and stops in the appropriate places. So from your rejection block, you get that breaker back to fair value, and fair value is going to lead you right to your opposite order block. If you need the cheat sheet, it's right here. RB, rejection block, breaker, fair value gap, goes to your opposite order block. Mitigation, and then ends at your liquidity void. But the reason why we pointed out all the way to the order block and I technically stopped giving a fuck about it is because the trade is done. The mitigation block and liquidity void can be, I mean, like low retracement, whatever, whatever. And then you can get that little blast to the high. Plenty of times. Doesn't even have to fully stop here. It will. Tell you that now. But doesn't have to. It could easily just, right from your fair value gap, brick this thing and just complete the partition. But the reason why I draw it out like that, and I could go to another week and do it again here. But what I like is like, me personally, like Algo 1 is again, we looked at a idea of a trace. This is what usually fucks people up. Is because they're not thinking about algos at all. It's easier to actually interact with the dealing range without them, or to just come in with another idea, way of trading, even if it's like another ICT concept or whatever. And let's say you're, before you found out about my channel and Goldbach levels, that maybe you were trading market maker models, you know, before that by itself. All right. It's funny because like you could like hear me hitting the blunt. It's like weird. It's like, bro, can you like not smoke this much weed? Sorry, bro. Has to happen. Now, when you're looking at the retracement algo, it's so different from algo 2. Like a lot of people ask like, yo, I can't see like the algos. Like I just can't see them. That's because like everything else that we talk about on this channel, they are also fractal. So the same way that I'm coming on and I'm showing you that yes, you can see like a 27 by itself have an algo 1 or algo 2 profile, right? But what I'm also saying is if you have three 27s in a row making up an 81, all right? I have a whole thing in my Discord about what I call the three boxes, and it's a great, great concept. We did a version of that on this channel, but we didn't do it in depth. Okay. Now, when you're looking at three 27s in a row making up an 81, and like why the fractal nature of that is amazing in reality, is because it allows you to, again, not miss so much and always have an opportunity somewhere. Now, the retracement algo is so cool. And again, I did a lecture about this on how to max out with Algo 1. And dude, my dreads are like so long. I'm like always thinking something's like touching me like on my neck, but it's really like one of my dreads in like a weird spot. Like, oh Lord. And I know I'm like super annoying because like my ADD just randomly does shit like that, and I say it out loud, but I don't really care. Can people are annoying? I don't know. Probably could be, but that's why I'm here. And I think like the more people like accept like the personal flaws that they know they have, or not even like flaws, because I turn my flaws into gifts, obviously, and I shine in the environment I need to shine in. And realistically, like the way that my brain works and how I organize information, and that's why studying Michael wasn't very difficult for me. I'm very organized in how I study, and so I will sit here and smoke as much weed as I need to, and sit here till I understand it. And so the same way that the algos presented themselves, vastly different. Learned it in 15 minutes. And again, if it's referencing these levels in order, you're coming in and you're saying, you know what? It's not very hard. Dude, we're going to have to roll another blunt, man. It's funny because I have like another, actually, you know what? I have a second blunt next to me, and we're going to light that one instead. Just for a second. Like, when I tell you, like, I literally sit here and just smoke back to back because um, what else is there to do while you're working, man? Nothing. You work, you smoke, you get things done. I'm just always a productive smoker, always been like that way. But now, obviously, as I'm talking and ranting, I'm marking out the pathway for Algo 1. All right. And the reason why I can come in and do it so easily without thinking is like I want you guys to get comfortable with, again, it's just market maker buy model or market maker sell model. That's it. If you've seen those videos before, you understand how they work in reality, right? So we understand like the buy and the sell curve, their function. We can do a whole video on Algo 1 or whatever if we need to. But my whole point is, again, you're focused on like, again, I did the sell curve first because it makes sense clearly. And again, we're talking about how to identify both algos. Right? And so what I want you to do is, and again, we're looking at curve, right? after you have the curve. And again, typically, right, it'll complete the dealing range. Honestly, like 9 times out of 10, it'll fully complete it. And when it makes that little curve, it'll be like a nice consolidation, and then a nice, little fair value gap could pop in, or a liquidity void. It could offer you like a nice little variable in here, and I'll explain why in a second. And so, um, what's important though is after your fair value gap, again, we talk about how price likes to go through certain levels, and when price likes to go through certain levels, I mean, like it just looks like it's blasting through, and people get confused by that. They say, well, it didn't really stop here, it didn't really stop there. I don't know exactly where it starts or stops in the first place, so I have trouble looking for the algos. I don't really look for them at all. And my whole thing about that is like get used to the levels in pieces. Start to get used to like where all the PD arrays are labeled. Start looking for where PD arrays are actually working in these areas or not, and see how you're optimal in your approach here. Because if you can understand that, like, again, here is like again, let's draw the pathways out. Market maker buy model, again, starts at a high or a low of your dealing range. All right. So when you have a definitive high in here, you're going to pop down. It's likely going to bear shorter block in here. Right. Send its motherfucking ass all the way down here. And so when it does this, on the way, yeah, it's giving like little consolidations or whatever. You know what I mean? So that's why like a lot of people get confused whether this is like a full algo one or not, is because it's giving you small consolidations in certain parts of your partition. But in reality, again, it's just giving you the curve. So when you outline it or zoom out for a moment, you can see how price might be going down. It looks like consolidation here and then drops. Looks like consolidation on the EQ and it'll drop. Want to consolidate again at your breaker level and then drop. And so when it does that, the real curve, you'll see it like perfectly, beautifully between your low, EXT. Maybe it does a stop run, right? But I want you to be comfortable with the variables in here. And that's what I meant about even this area here, right when it curves. You have to get used to slight variables in the marketplace, whether it's where liquidity is based, or whether the draw liquidity is above or below you, or whether it's up in New York, down in the PM, or small variables. And the chart really does the same thing every day, shown to you in slightly different variables like this. And so whether you have consolidations on the way down or not, and one level like this gets like passed through, maybe you're expecting the EQ to get a small consolidation before continuing down. Sometimes it runs right through it. Both are valid. And you're not going to freak out at a certain reaction. You're going to keep on the narrative and understand what algo is running. Now you could do two things here, and this is important with algo one before we get to the algo two. Now watch. You watch some of the charter content. Now this is kind of like a given though. I mean, it's a great video that he does, but if you kind of look at the structure of this, it's pretty easy to navigate it this way. Now again, you identified the market maker buy model or retracement algo by again high low, order block, down to the breaker, rejection block, fair value, and it's not going to stop till it gets to this liquidity void. And then it's going to do whatever. It's going to stop and act like it's not going to complete it. Then it's going to blast up and then complete all the way up here, right? And so meeting the original consolidation parallel, right? We understand that's how it's going to work. We get this. But how you're going to trade this or participate, if you can see that you're going from high to low and on the way down to the breaker, and it doesn't give you the rejection block, breaker, back to fair value, this is different. This is where people get tripped up. Because yes, it's going to give you an imbalance in here. Yes, it's going to give you micro ones, but when you don't give a high low order block down to a opposite breaker, it's going to be damn near a straight line. It's not going to go. And now emphasis on this, because this is where Algo 2 really shines. It would really literally, if you even had to see it before it finished, it would have to go down to your breaker and back to fair value. That is already the start to Algo 2. So if you see that right there, that's different. It literally stops, leaves the liquidity so it can get back down there. This is going to run, and not going to consolidate again until you get here and then still go. But it doesn't have that breaker to fair value. It doesn't have that at all. At all. You can identify the sell curve, participate in the buy curve, because you understand that the algorithm is using this dealing range to do an algo 1. Oh, 27 specific dealing range, algo 1. I need to look for the sell curve, then buy this up. Complete the dealing range, no problem, and it's quick. It's tend to be non-lethargic, depending on the time you're looking to get in, right? Kill zone, whatever. But typically, again, this is very easy to do. You take the second side of the curve and you run it. There's going to be enough consolidation down here for you to get comfortable and identify this is already a curve or not. All right. Now you're going to say, yeah, well, what if price just keeps going down? Then you get out of the fucking trade. What are you talking about? Ooh, that sounds so mean right there. But seriously though, you either understand what algo is running or you don't. And if the retracement algo is running on you and you didn't realize it until EQ of this one and you're in cells, that's on you. You're not understanding of where the curve needs to curve. It's on a specific level of your dealing range. It's not anywhere. Your opposite rejection block, which is opposite of where it starts. And that's why the cheat sheet is on fire. It's nice. Still, again, very basic. If your understanding of, again, with your experience, right? Maybe you have traded market making models before, Goldbach, and now you understand how to do it algorithmically, though, looking at the levels. So, and again, this is all about how to identify these. So, next video, when we get into more examples of these, and you're like, damn, you know what? That looks exactly what he fucking talked about. I want you to go and study this type of price action. And like I said, it's different. This looks way different than a, curve. It could start here, come down, whatever. But you start from a definitive point. So if this was an algo 1, it needed to be way different. So you get that breaker down to fair value and you run to that opposite order block, yeah, that's clean. But regardless of, again, you can really have one side of the curve, full trade, understand the assignment. If you understand you're going from the high low, there's a bearish order block, and you start like just spooling down, and you can see that it's referencing that instead of doing the break into fair value gap. You want to take that sell curve and then buy it up. You can totally do that too. You can take both sides once you get comfortable. Do I encourage that? No. Let one side play out and then play the buy side. It's cleaner. But again, once you get advanced level comfortable, you can take both sides. Why not? It's going to work. Algorithmically, the dealing range has to work a certain way. Price is not going to go through it randomly. And again, it's doing it by a certain time. So it's also timing itself to get through the dealing range. And we can also talk more about that. But why am I so annoying? Join the damn Discord. All right. And so another video coming out shortly. But I will talk to you guys in the next part. All right. Whew. Time to roll a blunt.